Hello, and thank you for joining me for another talk at the Markets, Trends and Profits channel. I wanted to make a quick video about the technical picture that's emerged on Bitcoin over the last 4 weeks. Today, it is the 14th July 2021, and Bitcoin is trading at about $32,500. What we have here is the last 6 months of Bitcoin price fluctuations, which span the range between $30,000 and $64,000. The first time I reported specifically on Bitcoin was almost exactly 2 months ago, on 15th May 2021, when I warned about the imminent correction or trend reversal on Bitcoin. Today I want to call your attention to the pattern that's emerged over the past 4 weeks in the zone that's circled red in this chart. So first we'll zoom in to have a closer look, and then I'll explain the way I read this pattern. Here we see the way Bitcoin price has fluctuated over the most recent 4 weeks, and the first thing to note is that on 22nd of June, Bitcoin set a trough from which it bounced. Over the following 2 days, the price rallied and reached the local peak at about $35,000 on 25th June. This peak created a temporary resistance level at $35,000. The next day, on 26th June, it fell again to the new trough, but this trough was a bit higher than the previous one. What this tells us is that the selling pressure could be abating and buying power could keep Bitcoin from sliding further below $30,000. From this trough, we had a new small rally. However, this one was significant because on 29th June, it set a new local peak, higher than the previous one and breaking the $35,000 resistance set by the previous rally. This sequence of events completed a double bottom formation, which now established a support zone in the $30,000 to $33,000 range. In general, I think it is better to regard support and resistance levels as zones or price ranges rather than precise price levels. From this point on, Bitcoin price consolidated between $32,000 and $36,000, forming a pattern that resembles a slightly downward sloping channel or pennant, which indicates that for now Bitcoin could be well supported above $30,000 level and could be ready to break out higher in the near term. The implication of this is that Bitcoin could be a buy close to the $30,000 price level. This is close to the bottom of its support zone and could be a good buying opportunity. If we zoom out to the bigger picture again, we can see what this means. A buy at this level is close to the low end of Bitcoin support at about $30,000. This is not a prediction that Bitcoin is certain to bounce higher. Nobody could make that prediction. But it does represent a favorable risk to reward point, because if Bitcoin in fact continues to fall, we can set a stop loss level just below $30,000. This would imply a loss, depending on the level at which you buy, of maybe $2,000 or $3,000. However, if Bitcoin does confirm this support level and bounces higher, its first level of resistance begins at about $35,000. But in bouncing higher from the present levels, it would show resilience and might be more likely to break through the first line of resistance, potentially rallying towards the $40,000 level and thereafter back up towards $50,000. In terms of risk to reward, at this point Bitcoin looks like a favorable bet, as I tried to illustrate here, by shading the risk in red and the potential profit in green. I have to confess I'm not an unconditional Bitcoin enthusiast, and by this point I regard it merely as another tradable asset that fluctuates and periodically offers opportunities for speculative gain. But in addition to the favorable technicals at this point in time, Bitcoin could have important potential as a novel means of inflation hedging. That in itself could provide strong buying pressure in the medium and longer term future. Another reason why I thought I'd share this analysis is because I believe it exemplifies the appropriate use of technical analysis of price charts. Namely, technical analysis should not be used to predict what might occur in the near future, but to spot trades with favorable risk-to-reward ratios, fairly clear points of entry, and clear stop-loss levels. The whole business of trading amounts to taking and managing risk. We cannot predict future outcomes, but by following clear-minded analysis of markets and by adhering to a discipline to accept occasional losses when we get it wrong, we can profit from investment trades with greater confidence. As I mentioned in the past, I'm otherwise not inclined to offer ad hoc trading advice, mainly because every investment transaction entails two separate decisions. The decision to commit to a trade and the decision to uncommit, and the time interval between the two can be fairly long. An analysis at any particular point in time can only address the present situation and offer only half the decision support. Beyond that, the future remains uncertain. Every day is a new day, and the markets will continue to evolve in ways which we cannot predict. Instead, to provide complete and continuous decision support, I have created the ICE system, a model that conducts market analysis that's similar to what you saw in this video every day and generates trading decisions accordingly. But the ICE system has one significant advantage. Unlike me, it generates decisions with utmost consistency. It never forgets, it never gets distracted, and it never gets emotional about profits or losses. It is a trend-following pilot that can track over 200 different financial and commodities markets with no dilution of quality or focus. Today, I can propose ICE system on subscription basis in the form of trend compass reports that provide reliable, consistent, and effective daily directional exposure and timing signals. For those of you who are interested in trend following and chart analysis, you can sign up to receive Trend Compass reports, which will be free of charge during a 1-month free trial. If then you decide it is not for you, there's no further risk or commitment on your part. It's just a simple test drive. With that, I will conclude today's report. I will provide the links to Trend Compass reports below this video. In my next video, I'll discuss the relative merits of trend following versus value investing. As you'll see, trend following tends to be much more reliable in generating long-term investment performance, and on closer scrutiny, it turns out that even the iconic value investors like Benjamin Graham and Warren Buffett owed their outperformance entirely to momentum plays, which is another word for trend following. This is not commonly recognized in financial literature, but I trust you'll find my analysis compelling. To make sure you don't miss it, please consider subscribing to this channel. And until then, keep well, stay free, and please give this video a thumbs up. I'll see you soon. Bye.